record-setting net crude production, Cushing stocks still low, and residual fuel the lowest in 17 years? You're going to have an easier time navigating next week's energy markets if you let me walk you through what happened this week in oil. Well, let's get right to it. The monthly stats came out for November on the last day of January, and it showed net production at a whopping 14.3 million barrels per day. So, how did we get there? What the government said was of actual crude production, we had 13.3 million barrels per day. And then they added another 682,000 barrels per day of transfers. And then to that, they added 390,000 barrels per day of adjustments, which gets you up to that 14.39 million barrel per day record setting number. Now, why is that important? Well, let me tell you. We have the weekly data and we have the monthly data. So the weekly data is usually what moves the markets. Obviously, it comes out weekly, typically on Wednesdays. And the DOE gives us a crude production number with all those additions I just told you about, transfers and adjustment numbers. But if you were to go back and look at the weekly numbers in November of last year, November 2024, you would have come up with a much lower number. In fact, this monthly number signifies an increase of 740,000 barrels per day more production than what we had assumed by just looking at the weekly data. So again, why is that important? Well, the market seemed to be in maybe a little bit of a slump in Q4, especially in regards to where crude production was going, because it looked like it was pretty soft. Again, looking at that same data set, weekly numbers from the previous year, meaning November of 2023, were extremely high. So when you start looking at those as a comparison, you start thinking, well, maybe things are starting to slow down a little bit. Maybe the oil patch isn't quite as strong as we thought. No, we were wrong. The monthly numbers came out, which is a more robust data set. You can be sort of more sure of those numbers, if you will. And the government's telling us 14.39 million barrels per day, which is fantastic. And I hope we keep on growing that production. But the other shoe to drop, of course, is that stocks are still low, inventories low. Cushing stocks are still below 21 million barrels per day. 21 million barrels is the lowest we've been in the previous 5 years. All right. So, what's important about that? Well, Cushing is the delivery location for the NYMEX WTI crude contract, meaning if you go long the futures contract and it goes into expiration and you keep that long position through expiration, you're obliging yourself to take delivery of however much crude oil at Cushing, Oklahoma. Conversely, if you were to be short all the way through expiration and take a position into expiration, you are committing that you will be supplying barrels in Cushing, Oklahoma. Now, if there are no barrels in Cushing, Oklahoma, which, I'm being a little facetious, how are you going to deliver those barrels there? So things are quite tight. So that's going to keep the market propped up. Everyone who trades off the futures market, who understands the fundamentals, is going to try to keep that market somewhat elevated. And then there's another sort of physical market on top of that that's also very tight, trading the actual physical barrels. Things are so tight that you can't even blend your way into a WTI deliverable contract. And we'll get into that a little bit later, but just suffice to say, there's not a whole lot of WTI to be delivered into that WTI contract in Cushing, Oklahoma. Now we move on to Gulf Coast residual fuel. So, what is residual fuel? Well, it's what's left over. It's residual, as the name implies. After all the oil goes through the distillation column, and you get your, propanes and your light ends floating up to the very top, and you get your naphthas kind of in the middle. You get your middle distillates exactly in the middle. And then below that, you have your residual fuels. Now, complex refiners, like we have a lot of in the Gulf Coast, they can take those residual fuels and put them into upgrading units like a vacuum tower. They can put them into a coking unit, and they can break those really long molecules that are still left in that residual fuel and turn it into feedstock that would go into making gasoline and making diesel fuel. So if we're really low on those sorts of feedstocks, um, the feedstocks that go in to make gasoline and diesel fuel, then that's going to make it that much harder to make those fuels. Another thing residual fuel is good for is for fuels on ships, bunker fuels. Okay, so the sulfur usually has to be dealt with. You have to blend it away somehow. But that's where a lot of your weight comes from, your API gravity comes from when making bunker fuel. So again, if we don't have that material around, it's going to be much harder and drive prices up. So again, if the feedstock for making gasoline is expensive, well, then the gasoline's going to start to get more expensive. I think that makes sense. But maybe we should talk about why residual stocks are so low. There's a lot of crudes in the world that offer a fairly big cut of what's called the atmospheric residual cut. These would be medium and heavy grades of crude. Well, since 2023, OPEC Plus has taken a lot of medium barrels off the market. So there's just not as many to go around on the global stage. Fortunately for us, we're right next door to Canada and Mexico, and they do export a fair bit of heavy crude, especially Canada. So 4-week average on Canadian crude imports into the US, just north of 4 million barrels per day. Mexico's a bit lower at 380,000 barrels per day. And surprise, Venezuela's coming in right around third place in the 4-week average at 307,000 barrels per day. Primarily, all of those imports are either heavy or medium crudes and leaning more towards the heavy side. So if we do have Canadian tariffs go into effect over the weekend, that's going to be a pretty big deal. Now, I think the market still thinks it's not actually going to go through, or if it goes through, it's just going to be for a little while or something like this. So we need to really stay on top of what's happening. But it could be a pretty bad situation. And not just for crude either. It could be a bad situation on the refined product side. Because if you think about it, we import 200,000 barrels per day or so from Canada, from the east coast of Canada to the east coast of the United States. There's a huge, very well run refinery on the east coast of Canada that just delivers like a fuel run of gasoline and distillate fuel right into New England and into Pad 1B, the Mid-Atlantic states as well. So again, if we're tariffed 25% on those barrels, depending on where they sort of start the tariff clock, if you will, that could be worth about 50 cents a gallon on gasoline. I mean, that's a pretty chunky number. Fortunately, I mean, if you want to put it that way, fortunately, gasoline prices are just low enough at the retail level that you probably won't reach that sort of magical 20% year-on-year increase level, but we'll see. Now, what do I mean by that? So us analysts realize that there's sort of a threshold. When gasoline prices go above 20% year-on-year for any period of time, that usually signals there's going to be some sort of pullback in demand. And again, it's sort of proportional to what else is going on. Is there inflation just in the oil markets, or is there inflation in all sorts of things? So it's left to be seen. But it's worth keeping a very close eye on. At any rate, I think those are the big things that happened this week in oil. Thank you.